Let's first talk a moment about what we're seeing in the market. I mean, we've seen this remarkable rally in the market since March 23rd. That's when we saw those lows. Do you think the worst is over for stocks, or do you see a retest of the lows happening, meaning there's a false sense of recovery happening in the markets now?
So I'm sort of more in Chris's camp, who you just had. I think that there's a water wall of money. It's not a bazooka from the Fed. It's literally a green tsunami of money. They've deployed $2 trillion, Allison, since the COVID-19 crisis started. They're going to deploy another $2 trillion over the next 14 months. The magnitude of that is staggering. And just to go back to the 2008 crisis, the Fed deployed $1.5 trillion over 18 months. So I think it's impossible with that level of liquidity going into the overall marketplace for it to not show up in asset prices. And with rates as low as they are right now, the opportunity cost augurs for people to be in the market. What I'm worried about are those top 10 names. Those FANG stocks are very reminiscent of the Nifty 50 back in the early 70s, where it was just buy these 50 stocks, close your eyes, everything will be fine. Those FANG stocks are working. They have worked successfully. But what we know about Wall Street, when the music stops on those stocks, you could see a 30 or 40% drawdown. That happened during the Nifty 50 crisis leading into 1974. But I think for right now, Allison, I think the markets are very buoyant, and it's going to be liquidity driven, less so about fundamentals and PE ratios and things like that.
All right, so we are seeing these equity valuations elevated, to say the very least. Where do you see opportunity then in the markets?
Well, the biggest opportunity is in the fixed income markets. The equity markets have priced a full recovery, and they're looking at sort of a fourth quarter 2019 GDP print for the first quarter of 2021. That's how the equity markets are priced. But the bond market's telling a different story. The bond market, particularly in structured credit, is still lagging as we're waiting for mortgage delinquency data and mortgage defeasance data to come in. And so far, that data has been quite good. And so you're seeing the structured credit market start to move now. But if we're right in terms of our analysis that the default rates are not going to be as high as previously expected, you'll see that stuff start to correct back to its mid-March level. So there's probably a 20% move in the structured credit markets, where that move has already taken place in the stock market.
All right, your investment firm, SkyBridge, was hit by heavy losses in March. Talk to me about what happened there and what's your strategy now?
Yeah, so remember, we are in structured credit, and so those are mortgages, those are CLOs and mortgage-backed securities. And so unfortunately, the global pandemic struck right at the heart of those securities because people got very fearful that with a work stoppage, and at that time no one knew how long that work stoppage was going to be for, that there would be high mortgage delinquencies. And so there was a contraction in that market. There was excessive selling in the back half of March, and there was a lot of deleveraging from the mortgage REIT companies. And so a lot of the people around us went down 40 to 70%. Because we're in a hedge position and we had a net long exposure less than 1.0, we went down about 20. But we're making a steep recovery now, and we're very, very optimistic about that situation. I guess what I like to caution people about is everybody is a long-term investor until they have short-term losses, Allison. And I think what people need to do is they need to look through the current pandemic, have a 3 to 5 year investment horizon, and just stay patient. And so, yes, we did suffer losses in March. It was very similar to what happened to us in 2008. And in 2009 and 10, we went up 40%. And I expect we'll have a similar style of recovery here, provided that we're correct on our credit analysis, that the mortgage defaults that were predicted will not show up.
When that nervousness in March was happening, did a lot of your investors bail on your fund?
Well, I mean, we had redemptions. The good news for us is we're open on a quarterly basis. It just so happened that when the crisis started, our window opened. We had about $300 million of redemptions. We're running about $7.7 billion. I didn't think that was so bad on a relative basis. we got really hit hard in 2008. We had about 35% of our fund redeem in 2008. We were down 20%. I cautioned people back then not to redeem, and the ones that actually listened to us got rewarded with a 40% move over the next 2 years. And so I think we've got a very smart group of people. Sometimes people will panic out of a situation. I totally respect and understand that. I think what's important for people to know is SkyBridge will meet every redemption. There'll be no suspensions. If people want to redeem, we totally understand that. But after being in this business for 31 years and 15 years since the founding of SkyBridge, I've seen a number of these crises. It is the worst time to sell in the middle of a crisis. So hopefully we can convince people to see through it. But we did get hit with about $300 million of redemptions.
All right, let's talk politics and 2020. How do you see Donald Trump's reelection chances?
Well, I want to speak as a capital manager, not somebody that's invested in the political, opinions, if you will, the political punditry. What I would say is that he has a tough climb from here because of what's going on in the economic landscape. It is very hard to survive 14, 15% unemployment. That number is likely to go into the low 20s. I think it is, to be fair to the president, it is temporary and it will start coming down once we can normalize the economy, and obviously the PPP will help that. But I think that those numbers are very, very rough for an incumbent. And so if you look across the board and you look at the Rasmussen numbers, which are usually favorable or tilted slightly towards the president, those numbers are very bad. But the numbers I'm looking at that would have me have major concern inside the campaign are the demographics of women older than the age of 50 in the 6 most important swing states, Allison. Those numbers are really bad. He's got a 24 to 30% gender gap in those numbers. And those people are voting not necessarily on the economy, but they're voting on the style, they're voting on the bullying, they're voting on the rancor that's coming from the bully pulpit of the presidency. And I think it's going to be very hard to recover those people. Now, having said all of that, to be balanced, I was with President Trump during the Access Hollywood situation in October of 2016. The flash polling, he was down 13%, and he made it back, and he went on to win the presidency in November. So anybody that says they really know what's going on this far out doesn't really know. I can tell you in Trump world, we're 170 plus days out from the election. That's like 500 years in Trump world. So who knows? I mean, that's like taking the country back to Christopher Columbus. So for me, I don't want to be in the prediction business, but I will say this to market participants. It's not going to matter from the Federal Reserve perspective as it relates to policy or COVID-19 economic policy of recovery, like what President Obama did with President Bush. The mantle of that recovery and the mantle of those policies, that baton, will be passed to the next president. So whether it's a President Biden or a President Trump, I'm very comfortable that the economic policies are going to stay intact. And that's very bullish for the U.S. economy and for the U.S. stock market.
So there's the economy, then there's how President Trump is regarded in how he's handled the coronavirus crisis. Americans can't turn their heads to that. That matters come election time, even if we're a ways away, don't you think?
I do. And again, to be fair to him, I think it's a very tough decision to sit in the Oval Office. You're getting intelligence data, and you're getting information from your team that you need to shut down a booming economy. He was coming off of the impeachment. And so I think the impeachment vote was February 5th. He's looking at that data, and I think he made the decision to leave the economy open. In fairness to him, we have the benefit of hindsight now, but I don't think any American president would have shut the economy immediately like they did in South Korea. We just didn't have that cultural experience of dealing with MERS and SARS. So I want to grade him fairly, not with any political bias. I would say that he probably waited too long. And I would say that the information coming from him hasn't been accurate. 62% of the American people, when they're polled, they say they don't believe the information coming from the president. When he's making suggestions about hydroxychloroquine, or he's talking about injecting bleach into people, or I don't know, you can look at the tapes yourself. Some of that stuff is sort of incredible, and it's it's unbelievable. And I think that hurts his standard and it hurts his credibility. I think all of that will obviously be litigated come the fall in terms of those decisions. So for me, 100 years of data. This is usually an election about the incumbent. It's for the incumbent or against the incumbent. No incumbent has won the presidency in the last 100 years, having a recession in the year of that election. Now, this could be different because it's a COVID-19 induced recession, but those numbers are going to be very, very, very hard on him, and it's already being reflected in the polling. I mean, Joe Biden's stuck in the basement, and he's still giving President Trump a thumping right now. So it doesn't look great for him.
Last time you were on the show, you said you would campaign for former Vice President Joe Biden if asked. In a word, would you, yes or no, campaign for Joe Biden?
Yes. Yes.
Has he asked?
No, nobody's asked, but I've had some conversations with the Republicans for Joe Biden, which are now part of the Biden campaign. So nothing formal has happened yet. But if I am formally asked, I will definitely do that. I know exactly where to go in Wisconsin, Pennsylvania, and Michigan to make the case for Vice President Biden and why President Trump represents a danger to our way of life and our economy.
All right, Anthony Scaramucci, so great talking with you. Take care.
Good to be here.